Hey folks, welcome to pre-US session here, 19th of July 2022, back from a nice holiday in Carolina and back to markets that are really coming out of the lows of what has been a heavy chat around recession coming. But of course, this week we have the 25 basis point hike from the ECB. Now, as of this morning, 8:55 coming across the squawk, we saw immediate downside on the bund from this ECB saying that they may increase the rates on Thursday by 50 basis points. So that's really looking at going up between. So we could have on Thursday from Christine and the girls and boys at the ECB between a 50 and a 75 basis point hike. It's not actually clear whether that's 50 on top of the 25 basis points or it's just moving from 25 to 50. But either which way, the ECB is under a lot of strain here to really catch up with the rate hiking cycle that they're looking at in the US now. Of course, probability of a full basis point hike priced in for 75 or 85% from the Fed. So the ECB having a bit of catch up to do with its counterparts around the world. So let's get over to the charts and see what we can see currently here on these markets. So just moving over, seeing the dollar index pretty beat up over this ECB commentary. Down we go in the Dixie, but it wasn't seen anywhere as strong as the bund. So immediate, we were balancing here above pivot 152.16s. And then just really quite weak here on the 152.54s. We slip back down pre the comment, finding a little bit of support in the back into the range. Technically could have gone back up, but then it just slipped off a wee bit, hovered for a minute or two around 151.65s, and then absolutely just tanked off to find the lows there. I think of well, actually it wasn't the lows of last week, but the lows there of last Thursday, and S2 generally finding some support. In a couple of minutes, about 20 minutes, we are going to get European zone, Eurozone core CPIs and CPIs. Year on year set to come out on the core at 3.7%. I don't really think that we're looking to get a miss here. I think the inflation story is only actually gearing up in Europe, while we may possibly be topping out in the US, but that remains to be seen at this time. So looking over onto US equities, we got the Nasdaq here. So in the few days, we'll get over onto the daily bars here. In the week that I have been gone, we've probably seen let's see here. Look, a bit of downside finding 11,505 supports, and then back up we go to the 50 yesterday, supported by the 20 thus far on the market, pre-market for the Nasdaq. So let's see what we can get. Let's see what we can get here. It is looking a little bear flaggish to me. A little bit of this going on. Little bit of this sideways action. Not very clean as a flag, to be honest. Little bit of that there. So further downside, I think we may be able to see further downside over the next week. But for me, this market looks like it's currently supported, and we should factor in R1 today at least 12,074s for a push back up and maybe regain 12,454s half. We're going to look at the SPOOs, and we're going to look at oil as well. So looking at the SPOOs here on the daily bar charts, very similar pattern here, very similar pattern. Trend was actually broken there recently, but quite sideways sort of activity. Really, I think the market is waiting to see what is the next move out of the Fed. Is it 75? Is it a full point? Are these inflation figures going to keep rising? We did see a little glimmer of hope where inflation may be subsiding, but I think while I was away, the inflation figures did come out. Retail sales, though, quite positive, it has to be said. So you're probably seeing a little bit of the buoyancy in this market from those positive retail figures. But really, I think for me, Generally, I think we're going to trade 36.17s before the end of the month, and that's just me. So, that's the SPOOs. Oil, the perma bull. Guess what? Just when you think he's dead, he's not. He's still alive. Now, Biden came out of Saudi Arabia there yesterday with no talk of increased supply, and we kind of knew that was going to happen. The Saudis haven't got it. If any talk of them moving up to 13 million barrels production is not going to happen. They don't have it. They're not going to be able to do it. So that's why there was no deal from the Biden meeting. Plus, I just don't think Joe really knows what he's talking about when it comes to oil, nor do his advisors. And I'm not the only person in the market that thinks that, to be honest. So, I think Joe needs to get a better set of advisors for his energy policies. Needless to say, we are now rolled as of Sunday into Monday onto the September 22 contract on volume. Currently trading 99.13s. Let's see if this market, we've had kind of a breakdown on this trend. We're pulling back, looking at the 50 EMA here, just above, actually 20 EMA is the high of day on the market today. We can turn on that 50. I think we don't have the 50 on here, but that's fine. 101.71s is where that sits, just above the 20 EMA at the moment. For me on oil, I think we are still supported above this 2011 and 12 low of 96.11s back adjusted. So while we may have some serious selling in here, I don't know how serious it can get. You see, of course, here on the daily bars, we pull back in that Russian invasion pricing at 90.51s back adjusted onto the September contract here. And a ferocious amount of buying there. Still pricing in the premium of essentially what will be the European cuts on Russian energy supplies, coming off of Russian energy reliance. Russia, little fact here is Russia is actually producing at a higher level than it was pre the invasion. Of course, selling that oil to Asia at cheaper prices per barrel, but still production is higher. So quite a bit of softness coming into oil as we've seen over the last couple of weeks because of that. And also an incredibly strong dollar weighing on any upside we might look at for oil. So really, quite happy to be of the mindset of, if it's going down, sell it. If it's going up, buy it. So really, I'm going to be kind of neutral to bullish on oil for now. So as long as we stay above this invasion top 90.51s right from back here. All right, that's oil. Do I want to talk about anything else here? Really, the dollar. I mean, we've had a weak morning now from those ECB comments on a potential additional 50 basis points to the interest rate hike. You've seen the euro up on that as well, top left of your screen there. Nat gas, nothing to say on that. And gold, gold. Let's have a wee look at gold here on the daily bars. So gold has been, I'll go to a weekly look here on the bars on gold. We can kind of get rid of this bear flag here. But you'll note this massive bull flag I got on gold. So with a bull flag strategy, essentially we're buying the lows and targeting to the highs and actually targeting for the breakout. Now, gold has been the number one heartbreaker in the world of finance for the last 2 years. It's a comedy, really, but essentially, I like the longs from this zone in gold for pushing up. If we do break down in this area, I'm actually looking at that as a fake out. We could find support 1568s over the next few months. However, I don't see that as being on the cards at the moment. I think we got supports from these sort of grouping lows here from March 21. So the 8th of March, week of the 8th of March and the 29th of March, 2021. So we're finding buyers. I think, we can see gold back to 1788. So for the next kind of month, 2 months, on the back of this technical chart. So that's it for me for another pre-US look ahead. Do stay tuned in the room for 10 o'clock in 12 minutes for this European CPI. And listen, have a great day, and I'll talk to you tomorrow. Cheers.